You can change the world. Learn from proven change makers from all walks of life. They'll show you how to raise money, invest for impact, and so much more. You can start small. Start today and never quit. You can change the world by strengthening your superpowers. Now, welcome to the Superpowers for Good show. I'm your host, Devin Thorpe. Welcome, everyone. I am so excited. We've got Chris Miller with us from the National Coalition for Community Capital with us. And today we're going to depart from our patterns a little bit. Think of this as a special episode, so you don't want to miss any of it. But we're going to be talking about diversified community investment funds. This is an exciting tool for community builders, and my gosh, all of us should be community builders. So, stick around for this important conversation. Chris, welcome to the show.
It is a pleasure and joy to be here. I'm anticipating that it's going to be a pleasure and joy. I think based on past experience, it'll be a pleasure and joy. So,
well, it's always a joy for me to hang out with you. So thank you very, very much for making the time for this.
Yep.
Why don't you take a minute and introduce us to you and your work? Do you mind taking a minute for that?
Happy to do that. So, and you're going to show the B-roll, which by definition is not the A-roll. It's not the good stuff, right? So,
Right.
So this is just an amalgamation of pictures. So I am currently in a sort of a day job position where I work for the global leader in the manufacture of observatory class telescopes. I'm an in-house consultant for them. And concurrently with doing that, this is actually a picture from their campus, which is a 57-acre campus where both the manufacturing happens and we support local art groups and a woodworking institute. So we're also listing some of our partners here on the screen as well. So while I do my day job as an in-house consultant, I'm also spending about half my week every week with the National Coalition for Community Capital and our work around advancing that movement, which was really born, in my case, out of the need as an on-the-ground economic developer in a small community in southern Michigan to find capital to help businesses get started. I started that work during the Great Recession, a really, really lousy time to be doing economic development. There's family. Apologies, but that's some of us, including my wife. I'm so fortunate to be doing that work and have been doing that for about 12 years now, and both initially in the state of Michigan and then after about 2017, very broadly across the country. And that's how we bumped into each other. We got a great introduction by a good friend, Kathleen Minogue at Crowdfund Better, who said, "You guys should know each other." And since then, it's been nothing but fun.
Yeah, we have had some great opportunities to collaborate on different things, and I'm so grateful for the support, the partnership, and the opportunities. But over the last couple of years, the whole time I've known you, you have talked about diversified community investment funds, and that has gone from, in my perception of listening to you talk about it, from something that you were interested in doing to something that you were really doing. And it's gone from kind of concept to reality over these few years. And so I want you to give us kind of an update so we can talk about how people can actually deploy these in their communities. But why don't you start by giving us an overview of what a diversified community investment fund is?
Certainly will do. And it's interesting you characterize that as from concept to reality. And that's really been the course of NC3. When we first got together, we were really having largely philosophical discussions about what this could look like, because this was at the very beginning of investment crowdfunding, even before the federal investment crowdfunding was in place, some state-based, including mine in Michigan. We were talking about this. And we are gigantic fans of investment crowdfunding because we really think it has provided the energy to launch this idea that community folks, regular people, 90% of us who are non-accredited investors, should be not only investing for our own good well-being, but also for our community's well-being. The background is, of course, that there's been a fleeing of the idea that capital is controlled locally to it now being controlled by a very small number of people who don't live in your community. And investment crowdfunding does a great job on a project by project or business by business um, through that kind of a process to make a difference and start businesses. On my B-roll is a picture of my wife's business, which opened during COVID, a breakfast and lunch cafe and candy shop. And we did an investment crowdfunding campaign in order to give us the resources necessary to renovate the building and build a new commercial kitchen and create a wonderful community space. So, in like manner, when NC3 first got together, we met over 2014 and 2015. In 2016, we all came together in Portland, Oregon for a conference one of our colleagues hosted. And we made a determination at that point in time, because we were all having the same conversations and we were all hearing the same queries and same worries about what we were doing. And so we decided, let's form together and let's figure out how not to make the same mistakes all the way across the country, but at least learn from the mistakes that we make and find ways to advance this movement, which we saw as critical to communities and local economies and financial well-being and robust local economies and resilience and wealth building. All those things being really critical, and equity at the bottom of all of it, the most important piece. And so while we love investment crowdfunding, we also realize that for lots of folks, and Devin, you talk about this a lot. I know there's some great stuff in your book that's just coming out, and certainly the Impact Cherub Clubs that we belong to together, we talk about doing the due diligence piece. So we recognize at NC3 that not everybody is going to do due diligence, but we still want to activate local capital. We still want it solving local problems. And so knowing that funds are used to do good things like that, we started looking around at the Investment Company Act of 1940 and of the funds that were allowed to exist in the U.S. in that, and realized that, and I should say, realized for those of us who weren't in the investment advising world or weren't securities attorneys, they've known about these challenges for a long time. Most of the rest of us regular folks haven't known about them. But the challenge is that there isn't a really great structure on a national level where we can build a pooled investment vehicle, which is what an investment community investment fund is. So we pool our resources together and then they get reinvested, in our case, right back into the communities where they came from. So because that didn't exist, we examined a bunch of organizations that had sort of found workarounds, or they'd found ways to do creative things with those funds. Most notably, I think, nationally was the Boston Impact Initiative, and actually a series of cohorts that flowed down from the Boston Impact Initiative, where they took a charitable loan fund and really made it sing and dance in a way that the writers of that fund, I suspect, did not understand. And we love what that fund does, but charitable loan funds are limited to charitable. They're also limited in terms of whether non-accredited investors can invest in those funds and earn a market rate return, which they cannot do. So market rate returns are really not available in charitable loan funds. So they're really terrific, and they do some wonderful things on the charitable side, but they don't broadly apply to all communities, and they don't offer those people who are investing in those funds an opportunity to earn a market rate return. So we can't build wealth if we are getting returns that are lower than what the inflation rate is going at. And so we started looking at other routes, or the other things that we could do. And that process took some time. And we arrived about 2 years ago at this idea of a diversified community investment fund. And essentially what a diversified community investment fund, so first of all, that's an NC3 proper noun. So if you Google it, you may find us, but you won't find very much else on it, because we are piloting those funds out right now. So the Diversified Community Investment Fund works because it is a real estate fund, and the Securities and Exchange Commission in the U.S., the entity responsible for making us make good investment decisions by for most of us not making any investment decisions, but giving it to someone else to do that responsibility.
Yeah.
But the fund works as a real estate fund because the SEC doesn't consider real estate a security. And because it doesn't, and if the fund follows the language of the Investment Company Act, which determines how all of that works in the U.S., we can essentially stay out from underneath the heavy regulatory burden of funds where non-accredited investors are involved. And the real beauty or secret sauce to why the Diversified Community Investment Fund is attractive is that it's not limited to real estate. It has to be primarily a real estate fund, and specifically, it has to have 60% of its investments in real estate. But once you've met that bar, then you can take the other 40% and you can do whatever you want with it, including investing in any regular security. So that means any business that you would want to invest in, a local business that wants to expand, an entrepreneur that wants to start a new business in your community, or any project that can service that fund can invest in it. So it really becomes truly a community investment fund because it can address the challenges around real estate, which right now everyone has pretty suddenly figured out, oh my gosh, we need housing. So the fund can be deployed into housing, but it can also be deployed into the business community where really all community vibrancy flows from. If you don't have great business in your community, you're going to have a really tough time being a vibrant place that people want to live and be.
So with the Diversified Community Investment Fund, under this structure, is it eligible for raising capital under regulation crowdfunding?
It absolutely is. Thank you for that lovely question. Just like we planned it. Yeah. So we had some parameters in terms of what we wanted to have in the fund and what we wouldn't put forward unless we're in the fund. So number one is for non-accredited investors, there's an opportunity to build wealth. So if we couldn't go into a community and set a fund up, which provided an opportunity for the people in that community to build wealth, sort of what was the point of that? So it allows non-accredited investors to invest in it, and it allows them to build wealth, or potentially has the potential for building wealth, depending upon obviously how the investments go. And to that end, it also is really flexible in how you raise capital into it. So you can use Reg CF, you can use Reg A, you can use a direct public offering. Essentially, any way that's legal in the U.S. to invest in a fund, you can invest in a diversified community investment fund in that way. So a little bit longer answer than your question.
But that's brilliant, though. It creates so many opportunities, because then that would mean that you could use the Reg A to do a $75 million community investment fund, which, to crowdfunders sounds like a lot of money. Even in a municipality like where I live, of Stockton, California, $75 million is a lot. But, the city has a budget of hundreds of millions of dollars annually. Right. So it would still be relatively small,
right?
But it starts to really matter.
It does.
Even
a few $1 million here or there. Yeah, you're talking real money, right? So,
yeah, that's right. So this is exciting stuff. Listen, everybody, we're going to take a quick break here, but don't panic. We're going to come back and keep talking to Chris about how diversified community investment funds work. This is, again, a little bit of a special episode. We're departing from our superpowers for good patterns a little bit, because this is such an important topic. Stick around. You don't want to miss the rest of this conversation.
You can get in on the ground floor to help fix the climate crisis for as little as $100. Pause now to scan the QR code to get started, or visit s4g.biz/raisegreen. You can be a green at Raise Green. Join us at Supercrowd Chicago, with community-focused business leaders and investors working to support diverse founders, social entrepreneurs, and community builders. Learn how to raise money from the crowd and invest like a pro on June 12th at Columbia College Chicago. Register now at thesupercrowd.com. Hope to raise money from the impact crowd. Good investors are as interested in community, social, or environmental impact as you. Connect with Funding Hope, an SEC-registered FINRA member crowdfunding portal, to learn how to raise capital from the impact crowd. Scan the QR code now.
Welcome back, everyone. We're having a really important conversation today with Chris Miller of the National Coalition for Community Capital, NC3. We're talking about diversified community investment funds. This is really a fascinating discussion. Before we jump back into this, Chris, I want to point out that you'll be speaking at SuperCrowd Chicago on June 12th. We're excited for that event, but this will be an opportunity for people to come meet you face to face and learn more about these funds and how they work. So we're excited to have you there.
Well, I'm really excited about it. Of course, we've never been in the same space together. And so it's always fun to actually meet. I'm curious about how tall you are. I don't want you to tell me. I just want to walk up to you and we'll see. But
I'm 6'7".
Okay. All right. Great. I'm 6'6" myself. So So yeah, that's great. And as much as I love being able to meet with my colleagues across the country on a very regular basis on Zoom, it is so great to be in person. And I'm really fascinated by this whole evolution that's happening in the workforce now, and in your daily work about in-person work or virtual work. And for me, there's some really critical things that happen when I'm in a room with someone that don't happen, even though we've worked really hard. And I think we've done a really good job of developing a 360-degree relationship with each other virtually. I still have a couple of board members I've never met personally face to face, and it's a little odd, So I'm looking forward to being in person. Plus, Chicago's a great city, and it'll be great to be involved in a SuperCrowd Live project, which I have not been able to do until this one. So,
yeah, we're excited to have you. Thank you very, very much. Let's jump back into this diversified community investment fund discussion. Yeah. One of the key things that regulation crowdfunding prohibits is raising money for a fund. And so it's interesting that you have found a way to convince the SEC that this isn't a fund under the definitions of regulation crowdfunding. Tell us how this works. Because I really want to do this, and I want other people to do this. There are thousands of communities across the country that could benefit from a fund of $1 million, $2 million, $5 million that could be raised under regulation crowdfunding, and it could do incredible things to revitalize a little downtown by just taking a few buildings in a little downtown and rehabbing them, getting new businesses back in them. I mean, it could just be such a game changer. How does this work under regulation crowdfunding?
Yeah, so we didn't have to convince the SEC of anything. This was in their regulations. So the Investment Company Act, again, of 1940, that really determines how all of this works, really laid out a whole bunch of different schemes and types of funds, and it also laid out exemptions from them. And that's really what happens here in that structure, because they, again, don't consider real estate a security. If you're in the real estate business, you are allowed in the Investment Company Act to raise money for a fund. And then when the Jobs Act was passed and all the regulations were written around that, if there are exemptions in place, which are under the Investment Company Act, then you can do exactly what we're doing with this Diversified Community Investment Fund. You can raise money using Reg CF into a fund. There are actually some other exemptions out there, which we're also exploring, that would get us a little bit closer to what we have submitted to the SEC in proposal form, to that ideal community investment fund that really was not restricted in any way. And there are some of those where you can establish a fund, but you can't use Reg CF to raise funds into it. So, it's and we are hoping for some of those to change the SEC's mind in some of them, because there are other ways that you can raise money into funds, notably direct public offerings, which pretty much you can do with anything you want. And so if there's already a workaround out there, why don't you allow us to use the great mechanism that is now Reg CF, and all the terrific platforms and all of the work that's done, all the backroom work that's happened as a result of that, and the efficiency of doing lots of deals on Reg CF platforms. So, we hope to see Reg CF ultimately being used for any and all funds of any description for anybody.
Now, let's look for an example. Have you got anybody that is doing or has done a fund using your model that we can look to as an example, role model, follow what they're doing? I hope that there's a little bit of a public story somewhere we can grab onto.
Yeah, so in complete transparency, we're piloting these funds right now. So we have 4 funds that we think will be raising capital in 2024. So 2 pretty large projects, one in Detroit, where we're working with a consortium of nonprofits. The United Way put out a challenge to the community and said, we're looking for transformative projects for Detroit. And we're working with, a team of nonprofits that applied for that. They sent a proposal out about what they wanted to do, and that made it through several hoops to the point where we are now working directly with them, and we meaning also aligned attorneys, et cetera, who can help navigate the very technical part. So I'm not an attorney. You should not pay to any attention, any legal advice I spout today, just forewarned. So this project in Detroit, with a nonprofit leading it that was formerly called Southwest Solutions, it's now called My Place. And they are envisioning a renovation of about a 1.3 square mile neighborhood on Southwest Detroit, which ironically is right next door to where Ford Motor Company put $1 billion, that's B, into a former historic train station. And they're now occupying that with a bunch of very high paid Ford engineers and stuff. And the entire neighborhood around that train station has now been completely gentrified. I mean, it's nice. It's a lot better than it was. But if you don't have $400,000 to buy a condo, you can't live there. And so all of the citizens who used to live in that neighborhood can no longer. Right next to that is the neighborhood we're working in, where about 60% of the houses have been demolished because they were blighted. The commercial space, there's a couple of commercial routes through it. They have been demolished. Almost all the commercial property is gone. And this project envisions building on 800 parcels over the next decade or so, creating new housing, both multifamily and single, creating multi-use buildings with residential on the upper floors, and retail or commercial on the main floors, doing some purely commercial spaces, doing some green energy, doing some innovative house building, looking at modular house building and 3D printing, really interesting things like that. And so NC3 has been contracted to build a diversified community investment fund for that project. We're also doing a very large project in Cincinnati, Ohio, and working there with a consortium of faith-based institutions and the city and some philanthropic money, and a group of folks who are really anxious. So they've got control of some property on the riverfront in Cincinnati, and are going to renovate that property and create new commercial and residential spaces. Again, really rebuilding a small city within a city. One of my favorite parts of that project is one of their goals is to resurrect a Black Wall Street experience. So Black Wall Street, which was in Oklahoma and was destroyed in the race riots over 100 years ago, was phenomenally good at building wealth and recirculating capital. And I want to stop at recirculating capital just for a minute. It's really important always to remind ourselves that wealth building happens when capital is recirculated. So if you live in a community that doesn't have any stores in it that are local, all those dollars, or the vast majority of those dollars, really about more than 80% of those dollars, once you spend it in the store, it's gone from the community. So they're not reinvesting, they're not buying things from other businesses in the community. So when that recirculation happens, you can take $1, and in Black Wall Street, $1 went into Black Wall Street and got circulated 100 times before it exited. So every one of those people
Wow.
along the way built wealth. And today,
Wow.
if
That's amazing.
we get 5 times or 7 times, we're delighted with it. But
Yeah. Chris, as
oftentimes
we
we
wrap
get
up
once or
here,
twice. So yeah.
yeah, as we wrap up, take 30 seconds and tell us 10 seconds. How do people learn more?
So you could go to our website, nc3now.org, and check it out. You can also request time with us. We're having lots of conversations with folks all over the country. We're going to be putting out some information as those 2 funds, and then we're doing a smaller fund in Rhode Island and one in Northern Michigan. And we expect those 4 all to be raising capital, and we'll be putting information out about that. I'll be telling you about it, and you'll be telling everybody about it. So that's going to happen too.
Okay,
but yeah,
fantastic.
reach out.
We wish you every success, Chris. Thank you for all the great work you're doing.
Our
Let's do some
pleasure.
good.
Thank you.